Bowtie Nation, this is it. You asked for it, and we're finishing up our portfolio of daily dividend stocks. We all love that dividend income here in the nation, but hate waiting for it. So we're building a portfolio of dividend stocks that don't make you wait. A dividend investing strategy that will put cash in your account every single day. In this video, I'm revealing 17 dividend stocks with an average yield of 4.9%. That's nearly 3 times the yield on the broader market. Better still, combine these with the stocks in our first 2 videos in the series, and you'll create a portfolio that pays you every day. We can do this because most dividend stocks pay out on extremely consistent schedules. Investors love the certainty, and those dividend-paying companies try paying out in the same week, even the same day, every 3 months. And that means with a little bit of strategy, we can fill our portfolio with income stocks that are going to time our payments for every day of the week. Now, how this is going to work is through these 3 videos. I'll highlight those dividend income stocks that are going to be paying out in the next month ahead. For example, today we'll highlight 17 dividend stocks that will pay out in December, March, June, and September. I'll show you exactly how to find these stocks later in the video, but here you can see that I've analyzed almost 400 dividend stocks to find that perfect income portfolio for each and every month. The goal here is going to be about 60 stocks that will generate a dividend income on every weekday of each month. The best part is, though, not only is this going to be a well-diversified portfolio producing that constant dividend yield, I've picked the best dividend stocks with a yield over 4%. That's twice the average dividend yield on the market. Now, I'll be putting this video and the other 2 into a playlist on the channel called Daily Dividend Income Portfolio. If you're not part of the community yet, just tap that little subscribe button so you don't miss a single episode. Let's jump right into that list, and then I'll show you how I put together the portfolio of these daily dividend stocks. And we're getting started with a fan favorite here, Iron Mountain, ticker IRM, and one of the best dividend yields on the list at 9%. Now, IRM is a records management provider with more than 225,000 clients trusting it to store those hard copy documents as well as the digital transformations and storage. But the real value here comes from the company's real estate holdings, where this is all stored, more than 90 million square feet across almost 1,500 properties. The company is set up as a real estate investment trust, which means it gets a special tax break if it distributes at least 90% of its profits onto investors. Now that means you get that sky-high 9% yield with the stock going ex-dividend about mid-month in December, March, June, and September. Now, IRM is a great start to our dividend portfolio and has grown its payout by 27% over the last 5 years. Now remember though, the dates you're going to see here in the video, these dividend stocks are that ex-dividend date. Now how this works is the company's board of directors declares a next dividend and the ex-dividend date here. That ex-dividend date is the first day that the shares are going to trade without that dividend. So if you want that payout, you want to make sure that you pick up the shares at least 1 day before this date. But now the idea here isn't to be jumping in and out of these dividend stocks, so this really isn't going to matter quite as much to you long-term investors. Just put the stock in your portfolio and you're going to get that dividend every time it comes around. Next on our list of daily dividend stocks, Powerhouse Altria Group, ticker MO, and its 8.8% dividend. Now, if you're dead set against investing in some of these Vice stocks, then you can always substitute out this another dividend payer that goes ex-dividend around the same time as this. But for that yield and the dividend certainty, it's hard to beat Altria. Besides owning the dominant tobacco brand in the United States and a dividend that's grown by 53% over the last 5 years, Altria has some key investments that are going to help it grow. The company holds a 10% stake in the world's largest brewer, Anheuser-Busch, and a 45% stake in cannabis giant Cronos Group. So you've got the very stable cash flow from tobacco and the alcohol segments, and that moonshot potential in cannabis. Now, Altria is one of the later stocks to go ex-dividend on our list, late in December, March, June, and September. And that means you'll usually get your dividend payment about 2 weeks later. Our first stock in the financial sector here, $12 billion KeyCorp, ticker KEY, and its 5.8% dividend yield. Now, KeyCorp is a small regional bank with branches in 16 states, but really concentrated mostly in Ohio and New York. And those of you in the nation know financials are one of my favorite sectors for the next couple of years. The sector has been slammed by those low interest rates and is trading at a deep discount. Case in point, those shares of KeyCorp trade for just 0.81 times book value, which is 38% discount to that 1.3 multiple it traded at just last year. So potentially a lot of value to be unlocked if those interest rates start heading higher and the economy keeps growing. Beyond valuation and a high dividend yield, though, KeyCore has lately made us strong acquisitions in technology names like Hello Wallet and Laurel Road, which could give it that surprise growth over some of these other regional banks. The dividend payment has boomed 146% over the past 5 years and usually goes ex-dividend during the first days of the month in December, March, June, and August. Another value play here, $3.5 billion Devon Energy, ticker DVN, and its 5% yield. Now, next to financials, energy is my other big call for the next few years. And in fact, I've added Devon Energy into our 2021 Bowtie Nation portfolio on Stock Card. If you're looking for one sector where everyone is fearful and it may be time to get greedy, it's that energy space. The price of oil crashed this year on the loss in demand, and that entire sector has fallen 49% year to date. But look at these forecasts here. The Energy Information Administration still sees fuel consumption rebounding to 100 million barrels a day next year, and the way producers are pulling back, we could easily be in a production deficit very soon. And being ahead of this means finding those cash-rich, best-of-breed oil companies with the survivability to recover when the market does, and Devon is one of the best in the space. The company has nearly $1.5 billion in balance sheet cash and will have no problem keeping up with its debt. Despite dropping into negative earnings last quarter, the company still beat the market estimate by 30% and is expected to return to profitability by the first quarter of next year. Shares usually go ex-dividend mid-month in December, March, June, and September, and paid out a special dividend in August of this year. Even the lowest analyst estimate for this stock has shares up 42% over the next year for a potential huge upside along with that dividend. I'll leave a link in the video description below so you can follow the 2021 Bowtie Nation portfolio on Stock Card. You'll get immediate updates whenever I buy or sell a stock from the portfolio, even before a video comes out. Now, the portfolio is free to follow, but I also negotiated a special discount for all you out there in the community. Use the promo code BowtieNation, that's all one word in lowercase, and you'll get an exclusive 10% discount beyond the free trial. Omnicom, ticker OMC, is the world's second largest ad holding company spanning public relations, traditional, and digital advertising. Ad spending is the first to go when a company's budget gets tight, so it's no surprise that Omnicom has sold off this year, but it's still a solid company. The company has over $3.3 billion in balance sheet cash, so no near-term financial problems here, and is trading at a discount of 38% from its peak. Management has a history of beating expectations and is positioned very well for taking advantage of the growth in digital ads. The dividend payment has grown a respectable 30% over the past 5 years, and shares go ex-dividend early to mid-month. I'm adding some diversification here with Archer Daniels Midland, ticker ADM, and its 2.9% dividend. Agricultural producers have just started rebounding this year after years of trade war pain, and I think there's further to go for the processors like ADM. The company has one of the largest networks for crop storage and transportation, which should do really well as the trade picture improves. Even under that weaker environment, though, the dividend here has grown by 28% over the last 5 years, and I expect that to pick up. Shares go ex-dividend mid to late month in November, February, May, and August. Another energy name here with Schlumberger Limited, ticker SLB, and its 3.3% dividend yield. Now, this is probably the riskiest of my energy bets, but still a fairly solid company with $3.8 billion in balance sheet cash. As an oilfield services company, Schlumberger has seen its revenue plunge this year as explorers just pull back and let some of their fields go into maintenance. The company is one of the best, though, in its industry, with an advantage in drilling that's hard to beat, so there is a very good chance that this one survives and produces not only that dividend, but a hefty price return as well. The dividend was cut 75% in June to protect the cash flows, but still pays that 3.3% yield, and this one goes ex-dividend usually towards the beginning of the month. We've got 10 more dividend stocks to highlight, and stick with me because we've got the highest yields coming up. I want to go through really quickly how I picked these stocks, though, how to put them in a portfolio together so you can find your own dividend stocks or just adjust the portfolio when you need to. Now, the concept here was easy, but it took hours to put together the data. I took the 366 stocks in the S&P 500 that pay dividends, nearly 400 large cap companies. I then went into the stock page for each one. You can find this on any investing platform, but I went to Yahoo Finance and then this historical data tab. From here, I changed the time period and then to show dividends only to see the dividend dates for the last 5 years. I took that and copied it into my spreadsheet for every single stock, noting the dividend dates over the last year. Once I did that, I could note when each dividend stock paid out on each day and then could pick the very best for our portfolio. For example, for today's portfolio, there are 178 stocks going ex-dividend mid-November and into December. This allowed me to not only create an income portfolio that pays out nearly every weekday of the month, but also to select only the strongest companies with the highest dividend yields. Prologis, ticker PLD, is in one of my favorite real estate types right now and pays a 2.25% dividend. My bowtie warriors out there, you know I love real estate. I got my professional start there as a commercial property analyst and have had my own rentals, but some of those property types are just ugly this year. 8 of the 12 REIT property sectors are posting losses this year, with some getting absolutely smashed. Retail down 39%, lodging down 49%, and office space is down 30% for 2020. But there are some sectors doing relatively well, like industrial, self-storage, and data centers. Those are booming. And Prologis is a leader in that industrial space with over 900 million square feet of logistics and warehouse property. Now, strength in this segment is really being driven by that e-commerce trend and the need for those distribution centers, and it's a great long-term trend to be in. The dividend payment has increased by 45% over the last 5 years and usually goes ex-dividend mid-month, December, March, June, and September. CBOE Global Markets, ticker CBOE, operates the options exchange in Chicago and pays a 2% dividend yield. The CBOE is one of the smaller exchanges that have yet to be consolidated into those larger companies, but it still operates the largest U.S. options exchange as well as a futures exchange. With the growth in these retail stock trading this year, I'm surprised shares haven't done better, and I like this one as a rebound play. The dividend has nearly doubled, growing 83% over the last 5 years, and it's a great cash flow stock to be in, going ex-dividend late month in November, February, May, and August. Another investor favorite on the list here with 3M Company, ticker MMM, and its 3.5% dividend yield. 3M is one of the oldest companies on the list, around since 1902, and one that has increased its dividend for an amazing 62 consecutive years. The company operates in 4 segments: industrial, transportation and electronics, healthcare, and consumer, which gives it that breadth that you probably won't find anywhere else and really protects the cash flow. As big as it is, though, the dividend growth surprised me here with 43% growth in the payment over the last 5 years, along with a stable price return. Shares go ex-dividend mid-month in November, February, May, and August. Another one in the financial sector, this one in insurance with Prudential Financial, ticker PRU, and its 6.7% dividend. Prudential is the second largest life insurer in the United States, with significant exposure in Japan as well. Now, the entire industry has really been hit by those low interest rates, making it harder for insurers to earn a return on their cash reserves. But management has released a plan to cut $500 million from its costs to really boost that bottom line. Shares trade for a 30% discount on the price to book value, trading for just 0.4 times that book value of assets, and this one has grown the dividend by a solid 57% over the last 5 years. Hey nation, while I've got you here, I need to ask for a favor. If you're on the Instagram, head on over after this video and join the Let's Talk Money community. I'm sharing motivational quotes, investing advice, and a personal side I don't get to show here on the channel, so I hope I can see you over there. I'll leave a link in the video description below, or just look for Let's Talk Money _Joseph Hogue on Instagram. 6 more dividend stocks to round out the list, and next is Waste Management, ticker WM, and its 1.9% dividend yield. Now, a 2% yield might not sound like a great dividend stock, but this stock has produced an annualized 12.2% return on top of that yield over the last decade. It's the largest solid waste services company in the United States with over 250 landfills, and let's face it, probably one of the most stable business models you're going to find. The share price isn't the only thing growing though, with the dividend up 42% over the last 5 years, and one where you can count on with that future growth. I highlighted Huntington Bank shares, ticker HBAN, recently as a favorite in the financial sector, and its 6.3% dividend yield. Huntington is another small regional bank with branches across 8 states in the Midwest. The bank has doubled the amount in its loan loss provision account to over $1.7 billion this year and still has been able to consistently beat those earnings expectations. This is trading at a 35% discount to that last year's price to book multiple, and if loan defaults aren't as bad as feared, could see a major earnings surprise going forward. Even with the slowdown over the past year, the dividend has grown by 114% over the last 5 years for a great yield on top of that price potential. A little more of a safety pick here with PPL Corporation, ticker PPL, and its 6% dividend. PPL is a regulated utility provider in Pennsylvania and Kentucky that recently announced plans to sell off its UK operations. Now, that's going to take a lot of the uncertainty out of this business model and allow the company to focus strictly on its U.S. operations. The move also gives it more dividend stability and should also improve investor sentiment in the shares. And that dividend uncertainty has played out with just a 10% dividend growth over the past 5 years, the lowest in our group. But I think you start seeing it grow faster from here. We're closing in on the last 3 dividend stocks and the highest yield in the group. But first, I want to throw this out to the community. Which dividend stock did you expect to see in the list, but maybe didn't? So just scroll down and let us know in the comments below, whether in this video or in the other 2, which dividend-paying company do you think should I have included? Another agricultural player here with FMC Corporation, ticker FMC, and its 1.6% dividend yield. Now another one with a relatively low dividend, but an amazing total return, producing a 12.6% annual price return over the last decade on top of that yield. Now, FMC is a pure-play crop chemical company and should benefit from that long-term trend in food demand and just the need for those higher crop yields. Shares are fairly valued here, but it's hard to argue with 166% growth in the dividend over the past 5 years and that kind of long-term price return. A little riskier bet here in the real estate space is Ventas, ticker VTR, a healthcare REIT, and its 4.3% dividend. Ventas owns a portfolio of 1,200 properties across medical office, hospital, and healthcare, but really concentrated in that senior living and the skilled nursing niche. Most healthcare properties have been hit hard this year, but most especially the senior care market. But even this one is now looking to turn more positive. Occupancy hasn't declined significantly, and with a vaccine approval, we should get better investor sentiment in names like this Ventas. Shares are down 41% from last year's peak, and the company did cut the dividend this year to protect that cash flow, but I think this can be a strong long-term investment. Valero Energy, ticker VLO, offers our highest yield of the group with a dividend just under 10%. One of the largest refinery operations in the United States with 14 facilities in North America and the United Kingdom, this company is uniquely positioned to refine that lower quality crude and has been able to use that to produce those higher profit margins. And the refineries have also been hit hard this year, just like the energy companies, but quality names like Valero will survive. The company also owns over 3,100 miles of pipeline and other midstream assets that gives it that transportation advantage. Valero is one of the few in the energy space to maintain its dividend this year and has nearly doubled it over the past 5 years. The 17 stocks in this month's portfolio produce a dividend yield of 4.9%, just slightly above the entire 56 stock portfolio with its 4.2% yield. Now that's 56 dividend-paying companies in every sector with a yield more than double the overall market that's gonna put cash in your pocket every single day. Click on the video to the right for the first video in our daily dividend income series, your dividend income stocks for October, January, April, and July. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.